All right, welcome everyone. It is 3:01 now. We're going to get started today. And so I'm welcoming all of you. I know there's a large number starting to join. So as you come on board, you'll be muted, but that's because we have the large number of attendees. And then we have a great lineup for you today, including a special guest. So again, thank you for joining us. This is the 6th in a series of webinars for small business, navigating the impacts of COVID-19. I'm Barbara Coffey, Director of Economic Initiatives for the City of Tucson. We'll spend the first half of our time today hearing from our guests, and then we'll have time for Q&A with all of you to round out our hour. As always, feel free to enter your questions in the chat box. We will get to as many of those as possible in our time together. And again, you'll stay muted, but I'll be able to see what's happening in the participant and chat box functions. We will record this session and make it available for everyone tomorrow. You'll find links to all our previous webinars at connecttucson.com. And typically we have the webinar ready for you tomorrow by noon. So Tuesday afternoon, you should find it there. And now we have a very special guest today. I am honored to have Mayor Regina Romero with us for a few minutes to start our session today. She has been working around the clock for the last 6 weeks or more to guide us through this pandemic. It most certainly was not the way she thought she'd start her first year as mayor, sure. But we're fortunate to have her leadership during this time of crisis. She has made sure that we took measures early on to minimize the spread and toll of this virus, and we appreciate that. And yet we know it comes at a cost as well, and particularly to our small businesses. So all of you so heavily impacted by what's happening. So with that, I'll let her share some thoughts with you on what she is doing to support our small businesses, employees, and their families as we go through this crisis together. Mayor Romero.
Thank you so much, Barbara. I really appreciate all the participants. It looks like we have about 69 participants on the webinar. Thank you all so much for joining the webinar. Thank you, Barbara, for coordinating this in our Economic Initiatives Office. I can tell you that I haven't been the only one working around the clock. All of our team in the mayor's office, the city manager's office, the city attorney, city clerk, and especially Barbara in our Economic Initiatives Office, working to find quick and swift solutions for navigating COVID-19 and this pandemic in our community for small businesses. And so thank you, Barbara, for doing lots of work to get information out to our small businesses. Small businesses are the lifeblood of our community. And, you know, I went through an economic recession when I first got elected. Back in November of 2007, I got elected. In the summer of 2008, we hit the Great Recession. And I had to learn how economic development is done, right? The city of Tucson at the time did not have an economic initiatives office. We did not have tools in the toolbox that we currently have. And we had to start from scratch. But I knew then, as I know now, that working on economic development issues and giving tools and incentives to small locally owned businesses, to development and to job creators in our city was not only good for the city of Tucson, but it was good for families. And so it's really important that we continue doing that. We just passed, as you might know, we created a We Are One Somos Uno Resiliency Fund with the help of Barbara and the Economic Initiatives Office, with the support of my council colleagues, that is a three-legged stool. One part of that that resiliency fund is for small businesses. The other is to work with nonprofits and the Community Foundation for Southern Arizona, because nonprofits will be suffering too, and many of these nonprofits serve vulnerable communities, and they will see a stoppage in contributions. And then the other portion is our workers and families leg of the stool. The small business leg of the stool, we are partnering with Business Development Finance Corporation, with City of Tucson Industrial Development Authority, with the Community Investment Corporation, which is a leg of the Pima County IDA, and other organizations, so that we can put 0% interest loans out there to small businesses. My colleagues on the council and I saw the value in this, and we acted as quickly as we possibly could. We put together $1 million through the BDFC, with a maximum amount of loan of $25,000 at 0% interest. We are quickly realizing that we will have to continue the discussion in terms of additional funds in the Resiliency Fund for small businesses, but we felt that we needed to put it out there quickly and make it available for small, locally owned businesses, which includes sole proprietors and self-employed. And so this is not the end. I have put together an economic development advisory council for the mayor's office, where we will have representation from the city manager to our economic initiatives office, to the University of Arizona Eller College, to representatives for workers and their families, to restaurant owners. It's going to be a small and mighty and well-represented advisory council, so that we can continue getting advice for putting policy together that will help our small businesses and our economy recover as quickly and swiftly as possible. And so I just wanted to be here with you to let you know that these webinars are important, that we are working day in, day out in partnership with our congressional delegation to make sure that City of Tucson and its businesses get their fair share, and that we want to recover quickly and recover strong. So I wanted to thank all of you for being here. I do have to jump off, but this is recorded. My staff at the mayor's office is also part of this, and I'm looking forward to continued dialogue and your input and advice as to where we need to go as a city.
I appreciate that, Mayor, and we absolutely appreciate the leadership at this time. I know there's so many high tensions, there's a lot of frustration, people are concerned, but I think we keep moving forward and we keep taking one step at a time to get what we need to get done, and I appreciate your leadership in that. I guess before you run, if you had 3 words of encouragement or advice to offer small business, what would you say right now?
I would first thank them for following the stay at home, for believing that this is one of the strongest tools we have to prevent the spread, and that we all understand that the longer the spread continues, the more our economy gets hurt. I would say as well, not to lose hope, that we are coordinating in partnership with Pima County, with our congressional delegation that are fighting for us. I've been working directly with Congressman Grijalva, Congresswoman Kirkpatrick that represent Tucson, Congresswoman Senator Sinema, and Senator McSally to make sure that we bring as many funds as we possibly can to our city and to Pima County. So it's a time for creativity and innovation, and that I would say that if you have questions, there are places you can call. and the Economic Initiatives Office is one of them, as well as the mayor's office. There are resources out there. Just let us know what you need and how we can help, and we'll try and figure out what we can do. But patience, gratitude, and creativeness and innovation is what we need to do to navigate these difficult waters that we're having to navigate at the moment.
I love that. I love that. And I know our businesses are creative. I've seen some amazing
Mhm.
things already. So we'll do that. And we'll remind them that they can donate to the We Are One Somos Resiliency Fund. Can you tell them quickly how to do that?
Yes, it is through the Community Foundation for Southern Arizona. So I believe it's as community cfsa.org/we are one.
Okay, great.
/we are one. So we will be rolling out additional information for the We Are One Somos Uno Resiliency Fund, because right now we're putting together all the infrastructure and logistics, but I also will be fundraising for that fund for small businesses, nonprofits, and workers. And so it's not the end. We will be putting out information for it. And stay tuned. Thank you, Barbara, and thank you all for participating.
Okay. Thank you very much, Mayor. Thanks for taking a few minutes to join
Thank
us.
you.
Okay. All right. Well, that's fantastic. And what a treat. There's so much going on in I know our mayor's world, and so we're so grateful that amidst all the conversations that I know she's having with the governor's office, with our federal delegation, with everyone, to make sure that we have what we need locally for small business to stay afloat. It's so very, very important. So again, thank you. So next up, we'll talk to Gary Melinda, President, Business Development Finance Corporation. His team is helping administer our Tucson Resiliency Loan Program that you heard the mayor mention. And we have been working tirelessly to put details together, but as of late last week, after the Tuesday council meeting, we do have the 0% loan program for small businesses, sole proprietors, 1099 contractors, and 501c3 nonprofits located within the Tucson city limits, and designed for those businesses with fewer than 50 employees. So Gary, let's start a little bit here by sharing, if you could, share an update on the federal programs. The SBA PPP program had its second round of funding. I'm sure it was a crazy day today. Talk about why the local allocation is so important to extend our ability to leverage those federal funds. Gary?
Yes, hi, Barbara, can you hear me okay?
Yes.
All right, terrific. Yes, it has been a busy morning. There has been extremely strong demand and interest from the business community, nonprofits, et cetera, for primarily for the PPP, but I think the mayor makes an excellent point that the Paycheck Protection Program is designed to be a bridge, if you will, a short-term facility to try to retain key staff so the businesses can truly reopen. And it will take, as we've all talked about, quite a bit more to really assist and continue to provide resources that businesses and nonprofits will need to navigate a new environment that no one knows exactly what it's going to be, but we know it's going to be a lot, it's going to be challenging, it's going to be work, and we want to be there to do our part. So I'm not a big fan of numbers, but just to give you some sense, this morning we had worked quite a bit last week and over the weekend, and with the Tucson Resiliency Fund and the funding partners that are involved, which I just want to mention, the City of Tucson Industrial Development Authority is contributing funding, as is the Growth Partners Arizona CDFI affiliate. Today we had almost $900,000 of PPP loans that were authorized by SBA, so funds are reserved for Tucson small businesses, and another $300,000 for nonprofits. So about 1.2 million this morning. Pretty good morning. And we're going to continue to. We still do have funds for other projects. And I think Barbara made an excellent point. the PPP is really bringing federal funds into Tucson. As you know, the idea is that the business can gets a forgivable loan, and once the loan is forgiven, the SBA or the U.S. Treasury will refund monies back that have been loaned out, will come back into the community where they can be again ready for that second phase where we start working with the businesses to reopen and to overcome challenges. So we're very excited to partner with the city and other community partners in this effort. It's been very, very exciting. We appreciate everything you've done as well, Barbara.
No, it's a partnership for sure, and we appreciate that, and really all of your team that answering the calls and talking to businesses, really hand-holding them through this process, which brings me to the process. Can you share a little bit about the process for applying, and what can a business expect when they go to the website, which is bdfc.com? When they go there to start that process, I know that it seems a little daunting, so I won't kind of sugarcoat that. I've heard somewhere around 17 pages of an application. That's not real exciting, but what do you say about that, Gary? What do we do?
Well, those are great questions, and those are there are a few pages. I will agree with that. Some are relatively. It's a fillable PDF. If you're familiar, if you have a business or a nonprofit, everything's going to make sense on that application. In order to understand the business, we will have enough information that we'll be able to determine, how is the business doing before they were impacted by COVID-19. What kind of resources do they have? How is the repayment and cash flow and so forth? And then obviously things have changed. So we'll be very interested to see what their plans are, how they're going to navigate the new environment, and kind of share that with us. And we have to balance that with relatively modest amounts of funds, but still critically important amounts of funds. So I think it's really all about striking that balance. But it's a typical loan application for a business loan, really, at the end of the day.
Well, you can imagine there are several questions already. I'll take a few of them. Questions about if someone were to apply through the SBA, do they find a bank willing to work with them? How do you respond to that?
Oh, that's a great question. SBA does not make direct loans. So yes, you can obtain an SBA loan from any lender. BDFC is an SBA lender, so we are a nonprofit, but we're a certified development company, so more of an SBA partner. So the SBA 504 is a real estate product, and the SBA Community Advantage is basically their larger program, which is designed to assist for any general business purpose, including working capital, equipment, you name it, things that are important to a business. Community Advantage was created by the SBA to address gaps, if you will. There were, even though every bank is a 7A lender, there's certain types of loans that are very difficult for a bank to do because of their highly regulated entities, and their credit policies reflect that safety and soundness, if you will. So the idea was that SBA would open up the program to the more mission-based lenders like ourselves, with the caveat that we have to focus on these underserved markets, which include younger businesses, startups, smaller loans, businesses located in low and moderate income census tracts, and so forth. So that's really our niche, if you will, and how we partner, or I guess complement what the banks are doing. We really never feel we compete with a bank, because if someone is bankable and they're able to go to their lender, everyone has a bank account or a bank of account. It's a great place to start. And if they're not able to put together a loan for a business, we'd be happy to take a look at it.
So is there a cutoff to apply for the PPP?
I would say we have a substantial backlog or pipeline that we're trying to work through that's in excess of available funding at the moment. And we hear that the second round of PPP is going to go quickly. But there's no cutoff at this point. It's just whenever the program, the funds are fully allocated or encumbered.
So there are, well, I'll follow up on that though. It's probably sooner, best to get your paperwork in sooner than later is what I'm going to suggest.
Absolutely.
It's a popular program. So the other couple questions on the EIDL, the Emergency Injury Disaster Loan, is that finished? What's the status of that program?
I don't think it's finished. As far as I know, people are still receiving either a notification or just a check. And there's others who they haven't received anything other than an acknowledgement that their application's been received. So I know, I believe one of our state U.S. senators has a hotline, I believe, where people can check in.
That's right. I believe Senator Sinema has offered to check the status of your applications to those SBA programs, including the EIDL. So we'll be sure to put that information in the chat box in a minute. There's an email that someone could actually send a note and give their loan information that they applied for, and then they have some caseworkers that will do some checking on that. So there's a question about the EIDL. Do you think it would get more funding in any new bills passed by Congress?
Well, I would hope it would. I think it's a very good program, but I don't have any particular insights into that.
Yeah. So how does the forgiveness piece work? This is another question from an attendee. On the PPP loan, how does partial forgiveness work? Is that possible? And is that calculated? Is that figured into it?
Yeah, that's a great question. So the loan itself is a 2-year loan. The interest rate is 1%. This is the PPP, and there are no payments for 6 months. So all of the applicants have submitted information about their payroll, basically their employees, including the owners of the business, who were paid wages. So basically the businesses and nonprofits will submit the same kind of information, a short 8 or 10 weeks from today. And to the extent they use the funds that they borrowed to pay wages, we'll check, we'll review that. They will certify, there'll be a form, of course, and they'll certify as to what they use the funds for. We'll check that, and we'll, acknowledge the loan is forgiven. And it could be 100% of the loan. It could be some other, say it's 80% of the loan, or let's just say it's 100%. So we'll basically acknowledge, confirm the loan is forgiven. We'll then request that SBA refund the money that was advanced, so the business will never have to pay the loan back, and in this case BDFC as the lender will get paid back by the SBA. So let's go through the other scenario. Something somehow they weren't able to pay all of the wages, but they still want, so they'd have two options. Well, if I borrowed $10,000 and I used $8,000 for eligible expenses, mostly wages, but there's other things in there without going too far into the detail of rent and utilities and so forth. Well, anyway, I spent $8,000 on eligible costs, so I have a balance of $2,000 that's not going to be forgiven. Okay, well, two options. I can just say, okay, I still want that money. I have a use for it, and 1% loan is pretty good. I'll hang on to that. And then there'll be no payments for 6 months, and then the business would start to make payments in month 7 through 24 and would pay off the loan. Or you still have the $2,000, so you can just pay it off now and you're done. So you have that flexibility to make your own choice.
So 2 more quick questions, and then I'm going to keep us moving, and then we'll still have time for questions at the end. On the PPP, there's a couple of questions here. It seems that it's geared more toward helping get employees back to work. that the comment is it doesn't really help businesses if they're closed. Is there a time frame or a plan for Arizona or Tucson to allow small occupancy openings? That sounds like a Tucson question. It sounds like it's relative to reopening. So maybe that is a slightly different topic.
Well, I think there's two parts. I think it's an excellent question. And I think the mayor touched on this as well. I mean, part of the ability to reopen is a function of still having your staff, your key staff. If they've all been laid off or fired, or, you know, they're taking other jobs or whatever the case may be, that's going to make it really hard to reopen, right? So I think that is part of the concept, is you can preserve your core, your leadership team, all of your staff, whatever makes sense for each individual entity. And I think that's the eye was towards reopening it, absolutely. And hopefully, you know, looking forward, hopefully in 8 weeks from now, things will look quite a bit better. So I think that's the first part of it, and that's an important part. Other than that, like when and how, that's really up to, you know, the federal powers and the governor's office to help to continue to, and the local jurisdictions to make those decisions as to the details.
So someone that has no employees, but they have artists who contract with them to sell their work through an art gallery, would they qualify for PPP forgiveness?
Let me think about that. So you have an art gallery. So let's just say that's a business, and to the extent there were employees, that would qualify. I guess the artist is perhaps an independent business person or a contractor, so they could apply directly for a PPP. But yeah, so I think you'd have to break that up a little bit.
Break it up. Finally, on forgiveness, does it matter the number of employees on the payroll at the end of 8 weeks to get forgiveness? I guess it has to.
It's not like you don't have to match it up exactly, is our understanding. You just have to pay wages to employees and document that those wages and benefits were actually paid out through, you know, appropriate payroll reports and quarterly payroll tax filings. So it doesn't have to be, my understanding is it doesn't have to be an exact match of what it was 2 months ago. So as long as you paid somebody something.
Okay, well, that's a fair amount of flexibility. I'm real excited to, so thank you, Gary. Stay with us because I know there'll be some follow-up, and I think this is a good add-on to the kinds of programs you've been hearing us talk about already. So I am going to introduce our next guest so we can talk about, and it's to a question that actually someone in the audience has asked about, because their question was related to startups and what are the best resources for fresh startups less than 3 months old. And I think Carrie may have some good ideas. Carrie Davis, Director of Alternative Business Funding for Community Investment Corporation and the Capital Access Manager for Kiva Tucson. Carrie has been a longtime volunteer in the startup community, and she's going to share a little bit about some new platforms that will give you some different options when it comes to access to capital. Carrie, I'll let you tell us a little bit about these community-backed lending programs that we now have available here in Tucson. Carrie?
Awesome. Thanks. Thanks for having me. I have some slides. Is that exciting?
That's great.
Okay, let's see. Let me share my screen here. I'll blow through these so we make sure we have enough time. And then I would also love to share these out after, because there's actually some links on the slides, which I know is useless in a presentation, but if you're looking at it, I would definitely encourage you to click on some of those. So,
great.
Okay, so let me see here. Let me present. All right, so you can see my slides, yeah?
Yes.
Okay, great. Okay, so I guess just to start, community capital, you know, there's some people call it crowdfunding. I like to call it community capital because I think crowdfunding, there's a lot of different kinds of crowdfunding, and it's easy to sort of get lost in all of it. What we're talking about right here is the ability for the community to invest in small businesses. So whether that's through loans or through equity investing programs, and that's what we think is a huge opportunity for our community. You know, there's never before been this many tools available, especially with some new things that are coming online, some new legislation that was created. So Two programs that we are running right now. We have partnerships with WeFunder and Kiva. So I'm going to talk about both of those. So this is the first one quickly. WeFunder is a program that was, okay. So WeFunder is an equity crowdfunding platform. And as I mentioned, there was some legislation that was created a few years ago that was that got through that allowed people who were non-accredited investors to invest in businesses. So before, investing in startups, for example, was solely for high net worth individuals. There's a pretty high threshold for the ability to become an investor, because there was some concern that people would wipe out their savings, and because startup investing, for example, is a little bit of a gamble at times. So now there's the ability for anyone to invest in not only startups, but businesses in their community. So you'll see here, Copperworks Distilling is a brewery. These aren't in Tucson, but that's just an example. So the requirements for WeFunder, the thresholds are pretty high. So they really recommend that you're a business that's looking to scale or expand. And the reason for that is it makes you much more attractive to an investor. So if they've seen that you are an established business, you're making lots of profit and revenue, they will be more excited to invest in you, to scale, to expand your business, open up a new location, build a new building, those kinds of things. For-profit businesses are the primary. I think there are some exceptions for nonprofits, but when you talk about equity investing, it's really, you can't have an investment, you can't have an equity investment in a nonprofit, for example. However, throwing a lot at you guys, WeFunder also has a loan platform. So you can kind of set the terms within WeFunder, so it doesn't have to be equity. The other thing I would say is, businesses that are looking to go onto the WeFunder platform need to be able to find that first 50,000 through their own network. So WeFunder itself is a huge community of investors, but in order to become sort of visible and exciting for people around their community, you need to sort of hit certain thresholds. And WeFunder really suggests very strongly that if you can't raise that first 50,000 to go onto the platform from your own network, that it may not be the right platform for you. I think you can raise up to $1 million. Minimum contribution is $100. Part of our partnership with WeFunder actually allows us to have a little bit of a break on the fees that WeFunder takes, as they're they take 7.5% typically to fund their operations, but CIC's partnership actually has gotten that lower to 6.5%. So if you come in through us, you get a little bit of a deal. There's also a disaster loan program through WeFunder. So they've lowered the minimum amount to $20,000, and it actually is just a loan. It's not an equity investment program. The rate is 3% non-compounding. And the way that they recommended payback, and you can actually adjust this if you want, but you don't start paying the loan back till next year, and it's only based on 5% of your revenue. So let's say next year starts, you're not actually making money yet, you don't have to pay anybody back yet. So you don't actually have to start paying people back till you're seeing some more revenue come in. You have 10 years, in fact, to stay on the WeFunder platform to make those payments. The closing fee there is only 3.75%. So the thing I would say too on all of these WeFunder programs, on both of these, the process really is for us to have a conversation first. That's what I'm here for. It's kind of great. WeFunder has a whole team that will then usher you through the process if it sounds like it makes sense. You'll have sort of like a caseworker, and they'll get all the right paperwork filed for you with the government. They'll help you create your financials. You do have to create GAAP financials, which in some cases will cost a little bit of money. That's what we've experienced so far. And they will also help you with your campaign. And once you're ready to get up on the platform, that's where we come back in and we'll help promote you. And we'll be there along the way too if you have any other questions, but that's how WeFunder works. We'll just keep moving, and then we can have questions at the end. So the other program that we have is Kiva, and that is a program in partnership. It's a Growth Partners Arizona program in partnership with Community Investment Corporation. I would love to highlight these two campaigns. These were our first two Kiva campaigns here. Teresa raised $15,000 on the platform, and Ricardo raised $7,500. And I'm going to talk to you about the whole process really quickly about how you go about getting a Kiva loan. So Kiva Loans, also community-backed lending, they are 0% zero fee loans. They're sort of that micro loan space. So they really help people who typically, they're really focused on people who have no ability to get loans any other way. So women and minorities and entrepreneurs who haven't qualified for any other forms of capital is typically their bread and butter. However, with COVID-19, they've actually expanded eligibility because essentially everyone right now is having a hard time getting access to capital, right? So that's pretty great. Typically, it's $1,000 to $10,000. However, they've increased that high loan amount to $15,000 with a 6-month grace period. So those are two of the things that they've done for COVID-19. And I guess at a very high level, a Kiva loan has a couple phases. You apply and then you go through what's called a private fundraising campaign, which is where you need your own friends and family and your network to actually contribute to your campaign, as little as $25. That's sort of how Kiva does underwriting. They don't do a standard underwriting process that a lot of banks would do. It's a social underwriting process that they use. So they feel like if your friends and family and network feel good about investing in you, then they feel good about putting you up on the platform and opening up your campaign to their entire network of 1.8 million lenders who at this point they've got money in their Kiva accounts and they're just ready to lend, especially to US lenders. So there's tons of capital sitting out there idle in the Kiva network that can help fund these loans really quickly. So then that's when you go into that public fundraising part. This is what I sort of just briefly touched on, but these are the loan sizes here. And another thing that I want to touch on is these private fundraising numbers. It's not a range. It's actually, it's either or. So let's say you're qualified for a $10,000 loan. You need 25 people to contribute to your private fundraising campaign. If you're endorsed by our certified trustee, which is Growth Partners Arizona, which we can work with you to do that. We actually collaborate a lot with the people who go up on the platform. Then you only need 15. So it's a little bit of a, it depends a little bit here. If you're endorsed by a trustee, you also can get your loan amount increased a little bit. The things that determine your loan range are your debt to income ratio. You have a separate business account from your personal account, your personal finances, and that you have proof of your business. So if you don't have those things, it doesn't mean that you can't get a Kiva loan, but you perhaps will only get approved for a very low number, let's say $1,000, as opposed to if you tick all the boxes and you're doing all the things you need to do, we could get you up into that third tier, perhaps even the $15,000 range. Oop, hang on, what am I doing?
It's fantastic. I just love the stories of the successes that you're starting to see already, and literally how it is the community rallying around the local business, and so I think it is quite unique with that low $25 threshold. It really makes it plausible for anyone to help a friend or family business that they have in the city throughout the region.
Yeah, I agree. You're right. It's if you've got $25 sitting in your account that's idle, you can help a small business owner kind of, get through this or do something new with their business, actually build their company. Here's a few things that would not qualify you. And I won't go through all these, but those are just some of, if perhaps you're currently in bankruptcy, you can't get a Kiva loan, things like that. So I just quickly want to have, I think, 5 more slides that illustrate the process really quickly. So when you start out, the most important thing I would say in any of these community-backed loans and programs is to tell your story, because people are moved by, what is it that you believe in? Why did you start this business? How are you impacting the community? And being the capital access manager for the Kiva Tucson Hub, I will help you do that. If you're not, if you need to sort of brainstorm, how do I actually make this a compelling story? I'm here to help you do that. Having a really nice photo, which is horizontally, what's the word I'm looking for?
Oriented. Portrait style, right?
Yes, horizontally oriented, and it really needs to be you somehow in your business or doing your business, doing your work, and they really like to see your face and your smiling face. They're pretty strict about that too. So if your photo is not horizontal, they really get, they say it's just not going to work as well. And they've got a lot of data, so I trust them. They also ask you questions about your financial situation, and that helps them determine kind of where you're gonna sit on that kind of loan access range. Loan use is another thing. You actually itemize your loan use in the Kiva platform, and that actually helps lenders feel a lot better too about what you're going to use the money for. Because if you're using it to help expand your business or to survive through, COVID-19, and you were making money before, that helps them feel good about giving you $25, loaning you $25, I'm sorry. So one thing they don't allow is consolidation of debt. You can't pay off a credit card with a Kiva loan. So once you have filled out the application, which usually takes maybe 1 to 2 weeks to get that all set, like I said, you have 15 days to do your private fundraising period. Then the next thing, they also have, Kiva has a lot of tools, so they give you a lot of ideas for emails to write to people and what to say on social media to reach out to your network. Because I think that's something that if you've never even considered a loan like this, it can feel a little overwhelming. But I guess I would just try to encourage people to, let's take advantage of all the tools that Kiva has. They've got so many templates, it's crazy. So once you get through private fundraising, like I mentioned, you go through the public fundraising period. That usually takes, I think they say usually like 30 days. But I will tell you, these loans that we have seen going up on Kiva are taking literally 1 day, maybe no more than 48 hours to fund. Because again, there are people with Kiva kind of funds in their accounts that are waiting for US-based businesses to go on the platform. So that's why we're really encouraging everybody to get their campaign up on the site.
That's awesome.
Yeah, it's really exciting. So then once you get funded, you get your money through PayPal. And that's another really important thing. They have a partnership with PayPal that actually kind of enables the 0% loan. So if you can't get a PayPal account for some reason or don't have one, we have to figure that out in order for you to use Kiva. So then you just pay people back, and that's the end of it. And the terms are set. I mean, the payment is monthly. And again, it's deferred for 6 months, but it's set in the beginning. So you will know in advance how much you're going to pay people every month. And the people who lend you money will be able to see how you're paying, that you're keeping up with your payments and that kind of thing.
I think it's really a great tool in our toolbox, right? Locally for that microloan option, especially sort of if you look at it like a ladder, and it's being the first rung on the ladder for many businesses to access some capital. I think it's valuable to have that step. And I know a lot of our startups that are familiar with, things like Kickstarter and other crowdsourced, platforms from maybe starting their own businesses. It's really just an extension of that type of framework that you could rally your community and your friends and your family around this particular loan opportunity that helps you get through a tough time right now. So I appreciate that. There's a question about the debt to income ratio, Carrie. What is that? They say, ask, fair to assume that that's for members of the company, a review of the personal finances. How does that review work?
So the person who applies for the loan, it's their personal debt to income ratio. They want to make sure that you're going to have the ability to pay back the loan. I mean, they certainly don't want to give you money that will make you compromise your position even more.
Fantastic. And yes, we were struggling with the horizontal picture, the landscape mode. That's what it is. Not portrait, it's landscape. I know. Oh my goodness. As long as it's a glamour shot, right? We're good. But let's go with a question about how Kiva Loan works. If your friend gives you $50 through the platform, can they expect to get the $50 back from Kiva as you pay back your loan? That's the question. How does it work?
It goes back into your Kiva account. So when they fully pay back the loan, you'll have $50 sitting on Kiva. You can take that out or you can reinvest it. Kiva really likes to keep people on the platform though, which is why there's so many people who do have money just sitting on the platform right now. We do have the option to take it out.
That's awesome. And so let's see what else is in. I see some questions that have come through. I know we've answered a few other questions about unemployment. So that Pima County one-stop line is there if you're a dislocated worker. Let's see what else. There are some follow-ups. Let's see if I have anything else on the Kiva or WeFunder. But if there is an independent contractor, there's a question here, Gary, it might be for you. For applying for the PPP on their own, if they're a contractor, how do they show payment of wages to themselves? So if they don't have a business checking account, but they have a separate account for business, how does that look?
Yeah, there's two options. Typically, if you're a 1099 contractor, the company you worked for will provide you with documentation, and that's what we need. If you're a sole proprietor, then your Schedule C and your personal tax return would document the wages you've paid to yourself, basically, or you've paid from the business.
So there's a person who's asking about sort of how do we know our banks are forwarding applications on to the SBA in the order they were received in the queue. Is there a mindset around that? Gary, do you have thoughts about how that works and how banks are treating those applications?
You know, unfortunately, I really don't. I don't really have any insights into mechanically how different lenders are treating things, but the expectation in the law is there to be, processed in order of completion. So I think that typically means when you have a complete application, you go in the queue.
Yeah.
And
then definitely, I'll clarify. There was a question about our Tucson resiliency loan through BDFC. Ours are targeted to people within the city limits of Tucson. But Gary, there might be other ways that you're assisting businesses throughout the region. Is that the case?
Yeah, that's a great question. One of our funders, the City of Tucson Industrial Development Authority, has a little more latitude to assist businesses and nonprofits in the MSA, the larger Tucson outside of the political boundaries, and the Growth Partners Arizona and we think Community Foundation of Southern Arizona are actually regional emphasis, multiple counties in Southern Arizona. Again, with limited funds. So, but yes, we have some latitude.
Okay. And there's a question, Gary, do applicants have to say how they envision spending the money or using the loan funds?
They do. There's a spreadsheet that they complete as part of it, and they certify. It's pretty simple formula. It's the average wages from the prior year, typically, times 2.5. So that's your loan amount. And then the eligible uses, again, are 75% of that loan amount should be used, or to be forgiven, you use 75% for wages, and the other 25% can go for defined costs, including rent and utilities and so forth.
Carrie, I was thinking about your examples earlier on Kiva with Teresa and Ricardo. I wondered if maybe in the chat box you could put a link to the pages so people can see how that shows up. I think it's a great way to see how it works.
Definitely, I will do that. I did have one other thought too. I would suggest for anyone who thinks they would qualify for either a Kiva or WeFunder to apply. I think you should apply for everything you can apply for, because some of this stuff is just so, who knows if you're going to get accepted. And I think we've seen some people say, it looks like I didn't get whatever loan. I think now I'm going to try a Kiva loan. You could try them all now. I would say there's no reason to wait because again, Kiva is 0%, no fees. So it's a pretty good option, The other thing I was going to say, Barbara, you asked earlier about startups. Kiva does, if you are a new business, they will consider you on a case-by-case basis. But it is you know, for people who are going to lend companies money, it's nice to see that there was some amount of revenue. You can be a newer business, I would say. Kiva would probably be the best chance for that. But, you know, Kiva is definitely there to help people grow their businesses. We're looking at, you know, Ricardo has a food truck that he's trying to expand. So it's very much, you can be, you know, a very small business and use Kiva to actually to grow. That's what they want.
That's great. No, it's a great point to exhaust all possibilities, right? Try all avenues to get what you can at this point in time, and then go forward with the right one. There's a question. Are there any reasons a nonprofit would not be accepted for the PPP? Gary, do you have a thought on that?
Not that I'm aware of.
And it says here, question, are nonprofits able to apply for loans offered through our Somos Uno Resiliency Program? And we do make our loan program available for nonprofits. And then I think you also, Gary, mentioned you've got some other options for nonprofits as well that you're assisting with.
Correct. Yeah, I think the other funders that are joining in with the city are making funds available, again, primarily for PPP in the short run, and then continuing to provide funding for the second phase of the recovery.
If a person were to get the PPP, they stay closed for 8 weeks, how is the forgiveness figured? The question is, do I still pay the employees even though I'm closed?
Yes. And you can pay yourself too. So, you know, if you're the owner of the business, that's okay.
And that's the whole idea, right? Was that you're keeping people whole, you're keeping them on so that when it's time to reopen, you're ready to go. And you
exactly. No, that's exactly right.
Yeah, and so that's been the primary purpose of the program. So it's fantastic. So I think, you know, one of the things that I think the message is to small business is that get this in motion now. I mean, some people have been working already for a few weeks on all the lending options that they are targeting. And so I think if you're still listening and you haven't picked one, maybe Carrie, your thoughts were go ahead and pursue them all, right? Pursue something that is going to help you, because we think there's going to be a few weeks here still before you're really opening up again the way we'd like to see. There's just a fair amount of reopening that will have to happen. As communities, it took a while for us to shut down in certain terms. It's going to take us a little while to reopen. So I think that's good advice. I know in our remaining minutes, I'm looking at any other questions that are coming through. Let's see. And I appreciate that, Carrie, for putting those examples in the chat room. So those are there. And I think we've covered most questions that have been asked today. We've had another great webinar. We've averaged about 80 folks actively on all of our webinars. We have good indicators that they're being well received as a recording the day later on YouTube, so that's great. So we're just pleased, and feel free to share this information with others. So if you're listening and you are in association with other businesses, please let them know. I think they make, you know, these are some good options. And so carry the information that you shared about WeFunder, about Kiva, give us all a few more things to work with. And I'm excited again that our mayor and council have made a loan program available, and they will continue to look at additional ways to support small business. We are still trying to uncover other ways to use the federal funds that are coming to the cities for relief from the COVID-19 pandemic. And we're going to find every way we can to put those back into the hands of our small business, our nonprofits, as well as our workers and families, as you heard the mayor mention. So I really do appreciate that. The one question here on the chat box is, are you going to talk about the fund that's being established through the Community Foundation of Southern Arizona? And that is a reference to the Somos Uno Resiliency Fund. Donations are being accepted there. The Community Foundation acts as our nonprofit 501c3 umbrella organization for that purpose, so that you can put your funds directly there and they are tax deductible. So that's a good benefit as well. And that website that you can go to do that is cfsa.org. And then you'll see some information on how to find the We Are One Somos Uno Resiliency Fund a program. And so once your donations are received there, then we're going to be looking for ways to funnel those to the groups that we mentioned, to our small businesses, our nonprofits, and our workers and families that have been impacted by this pandemic. There's a question about when applications will be opening up for funding. Now, I know our loan program is in motion, so that's where Gary, Melinda, and the Business Development Finance Corporation team comes in handy. So you would go, and I'm going to put that the website here in the chat box, bdfc.com. So that's where you want to go for the small business loans. And then, of course, Carrie, if you have a direct contact, you could put in the chat box for the Kiva and We Funder programs, who they should contact for that would be great. And then on anything else that the We Are One Somos Uno Resiliency Fund is doing, we will have more details to come on that. Right now we're taking the donations and we'll be directing. Oh, good. We've got a correction. See, I stand corrected. That's why we love these webinars, because you're never in it alone. You always have all these helpers. CFSAZ. Okay, so CFSAZ.org. I left out the important Arizona part. So it's there as well. And then if you go to Connect Tucson, you can also, we'll have a variety of resources that you can tap into there and get more detail on. I know many of you on this webinar today, some of you have been past presenters. I see Ellen Curtin has been here today with our Small Business Development Center. She is a wealth of information. She's been responding to chats. And so I think you have lots of people in your corner. Don't ever forget that there is free business counseling out there. SBDC is one of those valuable partners, someone that can talk to you about your own certain circumstances and how to deal with the specifics of your situation. And then you also have our SCORE counselors that offer free business counseling. And I know many of you that are doing the community investment lending and the CDFIs. So Growth Arizona, Leslie Pintor is on today. They all will help answer your questions, which sometimes that's the most basic need that you have, is just someone to talk to. So I appreciate that. And it looks like Carrie's got her phone number there, so you can reach her and talk directly about your programs. So it is just about time to wrap up. Any final thoughts, Gary, Carrie, anything I didn't mention that you would like to close with or add?
I'm good.
Okay.
Oh, I think you did a great job. Thank you, Barbara.
Barbara?
I'm happy to have you both. It's all about the resources that we can bring to bear. And so I'm very appreciative of your time today with us. So it is time to wrap up our time. Don't forget, next Monday, 3 p.m., we'll be here again. We have University of Arizona's Dr. George Hammond, Director of the Economic and Business Research Center at Eller College of Management, on deck next week. He'll share more on the economic impacts of the pandemic and what we can expect in the months to come. We may also have Local First Arizona on the same webinar. They will tell you what's happening across the state with our independently owned businesses and some of the creative ways that they are handling this pandemic. And so I think that should be very inspiring and also give you some good information so that you can start planning ahead. So be sure to register for next week's webinar when you see the email invite in your inbox. And again, we'll keep you connected during this time. You can reach out to us directly on our small business hotline at 520-837-4100. And we will answer calls, we'll make referrals, we will try to figure out what we can do to help you through this time. And do check connecttucson.com for updates. And if you haven't subscribed to our email, please do that by clicking on the email newsletter update list so that you'll be sure to receive all of these announcements. So again, with that, it's time to end today. I hope everyone has a good rest of their afternoon and that you get the information you need. So thank you all.